In today's Targets in Focus, we'll be taking a look at pound dollar, euro Swiss franc and dollar CAD. Joining me on the line to discuss these currency pairs is Michael Sneyd, FX strategist at BNP Paribas. Hello Michael. The pound was little change against the dollar on Thursday after the Federal Reserve said it would continue its quantitative easing programme at the outcome of its latest policy meeting. Based on this, what are your projections for the pound dollar?
Yeah, very interesting question on the pound. We've seen sterling, although it kind of remained stable after the Federal Reserve minutes, it's been very aggressively sold by investors over really since the beginning of the year. The combination of really things on the UK side, a couple of negative data surprises, with GDP print, talk of the EU referendum. We actually think that the pound has been oversold, and we think this is a good opportunity for long cable positions. We also think actually that long cable is a recommendation that's going to do very well, not just in the short term, but also in the longer term, throughout 2013. Reasons for this are really twofold. On the US dollar side, we see from the FOMC meeting that the Fed remains very committed towards QE, and we think that QE3 is going to be very significant for FX markets this year. And we're looking for the Fed to continue with its QE program all the way through at least until the end of 2013. And we think that this is going to be resulting in dollar weakness throughout this year. And then on the sterling side, consensus remains quite pessimistic on both the UK economy and sterling. We actually think that there are some signs of improving economic data from the UK, particularly kind of forward-looking data such as credit conditions, disposable income by households, and also business investments. These are time to turn up. And I think this is changing tones for the UK economy, and we think this will benefit sterling this year. So we think in the short term, we're looking for a bouncing cable back above 160 to kind of 162 area. Longer term, throughout this year, we think that cable could continue to move higher and looking for a break of 170 by year end.
And what are your short, mid and long term projections for the euro Swiss franc?
We think the Swiss franc currency is going to continue to weaken this year. We're looking for euro Swiss to move up to 135 by the end of the year. In the more shorter term, we think that we should see some sustained gains above 125. The key thing that's really driving the Swiss franc is the easing of fiscal risk in the Eurozone. We think this easing is likely to continue as we pass through the Italian election next month. And this should see, particularly in European bond markets, spreads continue to narrow. And a situation of narrowing spreads in the Eurozone is a very positive situation for the Euro Swissy. Also, what we think is quite important for the Swissy is the outlook for the SNB, the Swiss National Bank. We think that with inflation remaining very low in Switzerland, the SNB are likely to avoid doing anything that may cause the Swiss franc to regain some of its strength. So we think they're going to be remaining on the sidelines and avoiding unwinding some of the large currency reserves that they built up over the last couple of years. We think they're probably going to be staying on the sidelines, avoiding unwinding these reserves until we see Euro Swiss above kind of the 135, 140 area. So this should continue to allow the Euro Swiss cost to rise in our view.
The US dollar pulled back from session highs against the Canadian dollar on Thursday after data showed that the Canadian economy expanded slightly more than forecast in November. With this in mind, what are your forecasts for the dollar CAD?
Yeah, the dollar CAD has been an interesting cross recently. With the Bank of Canada's change in really their policy stance, really being one of the key drivers of the currency. The Bank of Canada have pushed back their projections of when they might first hike, and our outlook has changed from the Bank of Canada being a central bank that's likely to hike this year to a central bank that's probably not actually going to hike until mid-2014. So this is, of course, already put some upward pressure on the dollar CAD exchange rates. Going forward, we think over the next couple of months, dollar CAD is likely to remain range-bound somewhat. However, if we look further towards the end of the year, we do look for CAD outperformance, particularly against the dollar. Really against a backdrop where the Fed is continuing with quite aggressive QE, this should remain bearish for the dollar and very bullish for commodity currencies. And this will include the Canadian dollar. However, I think amongst the commodity block, when we took a look at the relative performance of CAD, Aussie, Kiwi, I think that while the Canadian dollar is likely to strengthen against the US dollar, so we're looking at dollar CAD to move down to spot 94, we are likely to see the Canadian dollar be the least favoured commodity currency, so it underperformed the likes of the Aussie and the Kiwi.
And which currency pairings do you think is weakest now and why?
We think when we look across the major G10 crosses, the biggest opportunity out there right now, we think, is long cable. As I mentioned earlier, sterling has sold off quite aggressively recently. We think investors have turned too pessimistic on cable. We think any further rally is likely to see some of this pessimism unwind, some of the short cable positions that investors put on be squeezed out. We actually think over a 1 month horizon, a long cable position, targeting a move up to around about the 162 area, is one of the best opportunities in the FX market at the moment.
Thanks for joining me, Michael. Here at Dukascopy TV, we'll be keeping you updated with the latest financial news. Have a great weekend and goodbye for now.